Stock market tumbling today as poor data fuels concerns that economy may be slowing faster than expected. We'll talk about it today coming up on Business Matters. Good afternoon, and thank you very much for being here with me today. Appreciate it. Looks to be a red day on Wall Street as all three major indexes saw losses. Although things were looking much worse around lunchtime, at the closing bell today, the Dow down almost 500 points here. 1.4% for the S&P 500, and the tech-heavy Nasdaq taking a beating, down 2.3%. And vaccine maker Moderna today, big loser. It's down over 21% on weak growth forecasts and a tough U.S. vaccine market. Chip designer, microchip designer rather, ARM down over 15%. It's been on the slide since releasing earnings yesterday, but today's drop could also just be tied to an overall correction in the tech space. Now, high-flying NVIDIA down over 6.5% today. Other AI-related stocks also in the red. AMD, Tesla, Alphabet, all in the red today. We have full breaking earnings data later in the show. But it's not just the stock market facing flashing red today. Warning signs in other areas of the economy as well. Weekly jobless claims now at an 11-month high. Today's labor market report also showing the total number of people on jobless rolls is at the highest since 2021. Yesterday, the Federal Reserve Chairman acknowledged that the jobs market was moderating and hinted that rate cuts may be on the way. The Fed has a dual mandate of maximizing employment while keeping prices stable. So with inflation cooling, it will now put more focus on supporting the jobs market, likely by cutting interest rates. And cautious spending has led to an apparent slowdown in the home goods market. Online retailer Wayfair reporting a loss of $42 million in the second quarter. Its CEO says the slowdown is unprecedented and likened it to the great financial crisis. Wayfair seeing declines similar to those from the 2008 to 2010 period. Home goods companies have been seeing sluggish demand for years now as fewer people move homes. So despite some calls to stimulate the economy sooner in the U.S., the Federal Reserve keeping its interest rate unchanged yesterday, but no such waiting for the UK's central bank. The Bank of England today making its first interest rate cut in more than 4 years. Policymakers narrowly voted in favor of the reduction. It brings the bank's key rate down to 5%. Officials warning that inflation may rise as a result of the move. The bank has been tight-lipped recently about its plans for the economy, seemingly not wanting to appear political in the run-up to the UK's general election last month. Now, back here in the U.S., manufacturing data suggesting a slowdown in the broader U.S. economy. ISM data showing the manufacturing sector contracted in July for the fourth consecutive month. It's now at its lowest level in 8 months. Some quotes from the report for you. Survey respondents saying, quote, ordering is still well below typical levels. Another saying, our business is experiencing the sharpest decline in order levels in a year. And another, business is slowing and we are taking cost actions. Now we're bringing in Andrew Cherlin. He's an Amazon vendor who sells a wide range of items from goods to toys to even dirt. He's also a sheet metal manufacturer. Andrew, hope you're doing well today. News just in. Amazon online store sales up a modest 5% year over year. To start off, give us your initial reactions. Does that surprise you?
It does surprise me a little bit. Based on many sellers that I talked to, I am surprised to see sales up. Although the way that Amazon counts sales and the way that many general sales people on Amazon count sales might be a little bit different and might be lagging a little bit. I am surprised, but the other thing to keep a track of, we are talking about revenue. I do believe that overall, Prime Day and some of the promotions did very well, but we have to keep in mind that those are generally used for promotional purposes. And although the revenue is very good, the margins and the sales aren't necessarily great for a lot of sellers.
Can you just elaborate a bit on that point? Because did you expect sales to drop?
I would say overall, most sellers I've talked to have seen sales year over year down 5 to 10% in general, but in some cases in a very down much more severely. We have to keep in mind that when we see very, very good sales around a sales event like Prime Day or like Black Friday or something like that, it actually, even though if sales are really good, it could actually be an indicator of weakness in the economy, that people are waiting and only purchasing based on sales promotions and heavy discounts. And so it's sort of a confusing situation when you see a very big Prime Day sale, because it could be a situation where really it shows consumer weakness, even though in the immediate term it shows some strength.
Right. Okay. Let's bring the manufacturing data today out into play. So, how's business for you? Are you seeing consumer demand to be strong, to be weak, or somewhere in between?
Again, it's a little bit tricky to say in this moment. Overall, retail and even manufacturing, generally speaking, except for seasonal companies, of course, generally have a little bit slower of a summer. What we've seen is a certain amount of stability. Certainly, we're not seeing the exact same kind of uh, tumult that we saw during COVID and things like that, where things were very up and very down depending on your market. But what I will say is that we are continuing to see the repercussions of COVID on the supply side, which could be a little bit interesting. For example, if you would have had some, if even years later, as you made adjustments based on supply issues around COVID, most manufacturers are still running into situations around evening out things that ebbed and flowed during that time. So we'll continue to see the consumer isn't ultra weak or ultra strong, but I have a very very um, uh, tenuous grip on what may or may not be happening in the economy.
Okay. Give us your outlook for the next 6 months. Are you feeling good?
For the next 6 months, I expect not a dramatic move up or down, but I do expect a gradual decrease and weakness in the consumer. I don't expect this holiday season to be particularly strong. And outside of companies that are able to offer significant discounts that drive some opportunity buying, overall, I expect the weakness in the fourth quarter to be throughout the entire economy.
Okay, let me mention this. It was interesting because in the report, industries are saying that contractions include fabricated metal products. So I'm just curious because how does your metals operation compare with your other businesses?
Overall, we make manufactured goods that are durable goods, so they last a long time, and they are not discretionary. So they're needs, not wants. What we're seeing is people and customers, both at the commercial level and at the residential level, being hesitant to make big investments in new developments because of the uncertainty. That could be around commercial real estate that's driving that. It could be in multiple things that are driving that. But overall, across
Right.
many different industries, there's caution around things like raising pricing and developing new products because there's an
Sure.
uncertainty around growth in the next 6 months and beyond.
Right. Okay, Andrew, thank you so much for your time today. It was a pleasure speaking to you.
Thank you so much.
Okay, moving on. Crowdstrike's shareholders are suing the company over last month's global tech outage. The meltdown crashed more than 8 million computers, and shareholders claimed the cybersecurity company defrauded them by concealing how its inadequate software testing could lead to an outage. Share prices plummeted in the days after, and the company lost 25 billion of its market value. The lawsuit seeks unspecified damages. In a statement, CrowdStrike said in part that it believes this case lacks merit and it will vigorously defend the company. All right, some quick headlines now. Hedge fund manager Bill Ackman pulling his latest IPO offering. Pershing Square USA was expected to hold many of the same positions as Ackman's other vehicles, but with lower fees. Ackman today hinting that there was not enough IPO stage appetite for the funding in its current form. And Hollywood's video game performers head to the picket line to protest artificial intelligence. They say top gaming companies are unwilling to protect voice actors and motion capture workers equally against unregulated AI. And the U.S. Department of Transportation wants to bar U.S. and foreign airlines from charging fees for families with young kids to sit together if adjacent seats are available during books. Japanese stocks see their biggest weekly foreign outflow in 10 months. Data shows foreign investors sold $10 billion in Japanese stocks. BMW under pressure in China with heightened competition and weaker demand. The German automaker reporting a lower than expected profit margin in its core automotive segment during the second quarter. Okay, taking a break here. Coming up, as Wall Street takes a beating today, we have the latest breaking earnings from Apple and Amazon. And how are Chinese Communist Party policies on solar panels and green energy rivaling global markets? Stay tuned for that. Welcome back. Today's top headlines. Red day on Wall Street. All three major indexes down today. The Dow is seeing its worst sell-off of the year. AI-related stocks taking a beating as well. Warning signs in the jobs market. First-time jobless claims rose last month to an 11-month high. Today's report also shows the total number of people on jobless rolls at the highest since 2021. Wayfair CEO says the slowdown in home goods sales reminds him of the 2008 financial crisis. The online furniture retailer reported a $42 million loss in the past quarter. And breaking news, just in now, Apple and Amazon reporting earnings. Apple shares flat in extended trading. Apple's iPhone revenue topped Wall Street targets, and that offset a bigger than expected sales decline in China. Overall, it returned to sales growth in the last quarter. Amazon, on the other hand, its shares falling over 6% in after-hours trading, despite second quarter profit beating estimates. One reason could be that Amazon predicting the current quarter's sales will be below estimates. Success in its AWS cloud computing apparently did not cheer investors. And now earlier from today earnings, shares down from shipping to footwear, with one packaged food company rising above the rest. So shipping group Maersk dipped around 2.5%. That's despite the company raising its full-year earnings forecast. Moderna has cut its sales forecast this year for vaccines for COVID and a respiratory virus. Its shares down a massive 21% today. Crocs slipped 2.5%. The casual footwear maker shared a disappointing margin outlook for the third quarter, but did report second quarter earnings that topped estimates. And a low note for Sirius XM, down over 6% today. The satellite radio company fell short of analyst expectations for Q2. And the maker of Morningstar Farms, Pringles and Pop-Tarts is one of the few companies seeing steady demand after price increases. Kelnova raising its annual organic sales and profits forecast. Its shares up and is up just shy of 7% today. Now, Meta shares remaining high after a rosy quarter and stable next quarter projections. We ask an analyst to comment on CEO Mark Zuckerberg's goal for artificial intelligence.
Meta's stock price rising today after the company reported a 22% increase in earnings, now at $39 billion. Meta says it expects next quarter revenue to be around $38.5 to $41 billion. Key takeaways: Meta's Threads app is seeing engagement, about to hit 200 million monthly active users. X has around 600 million according to Elon Musk. More people are using Meta apps. Active users are up 6.5% year over year to a total of 3.2 billion. Ray-Ban's Meta smart glasses are selling well, with demand outpacing supply. CEO Mark Zuckerberg saying AI investments are already paying off through better recommendations and more engagement. He plans on investing more into AI throughout the company. He says in the future, companies may not even have to make their own advertisements, known as generating creative.
In the coming years, AI will be able to generate creative for advertisers as well, and will also be able to personalize it as people see it. Over the long term, advertisers will basically just be able to tell us a business objective and a budget, and we're going to go do the rest.
Zuckerberg says he believes every business will have its own AI agent. Meta AI Studio is still in its early stages, lets people create agents which will chat with customers, answer questions, and create content.
Our goal is to make it easy for every small business, and eventually every business, to pull all of their content and catalog into an AI agent that drives sales and saves them money.
Zuckerberg says it will take time for the AI investments to pay off financially. He says open sourcing Meta's large language model, Llama, is an advantage. Open sourcing is when all the details of how the model works are shared with the public.
You get more people involved and you get more engineering. You get faster updates, you get faster advancement. Iteration will actually increase. And when you have increased iteration, that will actually hopefully, if you're playing your cards right, that should save you time.
Analyst Vijay Marolia says open sourcing saves time, money, and manpower. Zuckerberg says the models are an ecosystem rather than an isolated product and can benefit from open feedback.
Some China news now. The country's sluggish manufacturing sector could be facing a new level of gloom. A private sector survey of purchasing managers today found that operating conditions in the sector deteriorated for the first time in 9 months. As well, the Caixin and S&P Global Manufacturing Purchasing Managers Index fell into contraction territory and reaching a level that was the lowest since October last year. The two sentiment surveys this week pointing to factory owners struggling with poor demand. China's trade growth in the second half of this year faces numerous obstacles, including high geopolitical risks as well as supply chain disruptions. And as China's economy slows, global hedge funds are reducing their exposure to Chinese equities. The level of investment in Chinese stocks is now the lowest in 5 years. This is according to Goldman Sachs. Chinese shares are nearly flat this year. Early gains betting on a rally fizzled out, which was due to disappointment over policy measures aimed at reviving a sluggish economy. So selling in emerging market stocks last month was led by China. And hedge funds globally in total had roughly about 6.6% allocation in Chinese equities at the end of July, according to Goldman Sachs. Now, by comparison, at the peak, it was 15% in mid-2020. And the Chinese Communist Party's incentives for making solar panels have resulted in oversupply and bankruptcies. Now the Chinese regime is selling the excess equipment to developing countries as part of an initiative to expand its global influence. NTD's Sean Marshall has more information.
The Chinese Communist Party is undermining solar projects and companies both in China and worldwide. Chinese government subsidies leading to the oversupply of solar equipment and price wars that are pushing smaller companies out of business in China.
Too much production, which lowered prices, which made these companies not very profitable. And then the demand just isn't there. That's obviously the formula for a bad market.
But all that excess Chinese solar equipment has somewhere to go. China is selling it to developing countries through its Belt and Road Initiative. At a BRI meeting last year, Chinese leader Xi Jinping pledging to deepen cooperation in green infrastructure, energy, and transportation. Beijing often uses these projects to trap developing nations in debt. When a country defaults on their debt, China often gains control of critical infrastructure as payment.
And then at the end of the day, the country now owes a ton of money to China. A lot of the Belt and Road projects need to borrow again in order to complete. The borrowing was done in phases.
Western leaders seem concerned. A G7 program seeks to counter Belt and Road dominance and destruction by raising $600 billion in investment to boost infrastructure development in lower and middle-income nations, the White House said in a statement on June 26th. The plan is to help countries build infrastructure like roads and harbors who would otherwise rely on China's Belt and Road Initiative. Sean Marshall, NTD News.
Wall Street Journal reporter Evan Gershkovich and former U.S. Marine Paul Whelan are now among those free from Russian custody. That's after a large-scale prisoner swap took place earlier today. Here's President Biden talking about it earlier today.
The deal that made this possible was a feat of diplomacy and friendship. Multiple countries helped get this done. They joined the difficult, complex negotiations at my request. So for anyone who questions whether allies matter, they do. They matter. And today is a powerful example of why it's vital to have friends in this world.
The deal involves 24 prisoners in multiple countries. Besides Gershkovich and Whelan, a Russian-American journalist, Alsu Kurmasheva, was also released. Russia also released 12 German prisoners. In return, 8 Russian nationals, some suspected of ties to Russian intelligence, will be sent back to Russia. Among them is Vadim Krashikov. He was convicted of a 2019 murder in Germany, allegedly ordered by Russian authorities. In touchdowns, three-pointers, and corner kicks, for just under $43 a month, you can add a sports streaming package to your screen. Venue Sports is a combination of Disney, Fox, and Warner Brothers Discovery. It's going to include NFL and NBA games and the FIFA World Cup. Venue Sports says the service will provide access to 14 live sports channels and on-demand content from the collective companies. And finally, coffee is getting more expensive. Last month, the International Coffee Organization reported prices hit a 13-year high, averaging $2.27 per pound. Roasters and coffee experts signal that it could stay that way for a while. Coffee retailers are already feeling the pressure. Italian coffee maker Lavazza says it raised prices this year because of poor harvest, the war in Ukraine, and conflict in the Red Sea. Meanwhile, Starbucks lovers won't see a higher price tag just yet because the company buys coffee far in advance using fixed price contracts. All right, and that's all the stories we have for you today on Business Matters. Thank you very much for watching. If you have any feedback for the episode, please feel free to let me know. You can email us at business@ntd.com or leave a comment online. I do read them. Thank you very much again. We'll see you back here tomorrow.